All right, you guys ready for this one? This one should be interesting. I'm going to wade into some waters I don't normally wade into on my live streams. Where is my live stream? There we go. I'm going to talk about some things that, well, I'm going to red pill you guys the best I can without getting political, but there's some things that I've come to understand over the course of many years that I haven't really talked about, that I think it's about time that we discuss these realities about a few things. So anyway, how's everybody doing this morning? How is everybody doing? See here, completely forgot Thursday already. Morning. Yeah, sorry I was a little bit late this morning as well. It's really tough for me to get live by 8 a.m. and I wanted to collect my thoughts this morning because, again, I don't want to be political at all. So you guys have plenty of places to go to find political or people trying to shove their opinions down your throat about different things, divisive things. So we're not going to wade into those waters. We're just going to talk about as neutral as I can some facts that are inescapable facts of life. Hi from Cafe, just wanting to go into see some No Time to Die. Just waiting to go in. Okay, so like the James Bond No Time to Die movie? You're in a cafe? I used to live on... Oh, here we go. Okinawa, Japan. Glad to be here. Hey, glad to have you with us. Very good. Well, what's super interesting to me is I've noticed depending on what the crypto markets are doing, there's a huge fluctuation in the number of live stream viewers we have and the number of people following, unfollowing on Twitter. I don't talk about my follower. You'll never hear me talk about, I'm almost this many followers or whatever, or help me get this many. I don't really care. It's not why I'm doing this. And B, I don't consider anybody here my follower. You are all my colleagues in this, and we're all in this together. So I don't really talk about. I consider my quote unquote follower count more my audience or my So that's what I consider all of you guys here with me today. You're not my followers, or you're my current audience. But what's interesting is to start talking about the truths is that there's obviously a huge fluctuation of interest in the space that comes and goes as different things play out. And obviously there's a lot of interest in the space when price goes up. There's a lack of interest in the space when price goes sideways. And there's a lot of interest in bashing people when price goes down. But what I have here up on the screen, let's just talk about, we've got Alan's tweets to go through today. I do want to go through those. He continues to put out great work. I want to go through I just started this last night, this Wyckoff update. I was noticing this with my eyes and I kept posting about it. Let me go to my main Bitcoin chart here for you guys. All right, here's my main. This is I've switched to using the Coinbase feed because it gives the most accurate pricing, I believe, because of the high volume. They don't have their wicks are not as inaccurate. Like it's just a little bit more price. So while I don't actively trade on Coinbase, I use their main feed. And so this is what I've simplified my chart down to, is these handful of, obviously I've got my main. Somebody posted on Twitter, hey, we're still above the 120. Doesn't that count? Yes, it counts, of course. But starting into the truth number one here, we can't escape the fact that there's an insane amount of correlation between the price action we saw play out from basically the first of the year through all the way through July, and it's repeating all over again in a very small, consolidated, compressed pattern. But it is nearly identical. Now, I'm not a Wyckoff trader. I probably never will be a Wyckoff trader because I don't need to worry about the exact patterns. Because if you look at how these patterns play out, the way that we trade at CTM, and by the way, good morning, everybody. This is CTM. I should get into my disclaimer here in a second. And if you're new, welcome. If you're not, welcome back. I always forget that intro. I just started copying Jordan's intro, so that way you guys know where this is coming from. This is an extension of the Conquering the Market CTM family. I trade CTM style. So all of my trading is centered around that CTM strategy with my own customizations for what I like and what I do. The main customizations I use are, I use the simple moving averages instead of, sorry about the background noise there. I use simple moving averages instead of some of the other indicators to indicate trajectory, direction, whether we're in an uptrend or downtrend. I use the moving averages for that. It gives me a simple indicator to indicate when we're in an uptrend or versus a downtrend, when the trend is breaking, when one side's gaining or losing momentum. And the one that I back tested to be the most accurate is the 120-day SMA. Is generally speaking just for a broad. It's been crossed, in a significant way a few times, and there's been a big move after it, right? So we are above that. That's one slight difference about this whole mini, distribution and accumulation pattern. But that's one of the main things that so you see this. I have this on my chart here. Otherwise, it's all CTM trading. So these Wyckoff patterns, if they play out, you can see the way that these that our trend lines cut through here. We can still trade all around anything that's happening with Wyckoff. So we don't need to know all the details about the patterns and everything because we can accurately trade around it because certain patterns develop as a part of this. And so before I continue though, if you take anything that you hear here today blindly without doing your own research, you're going to end up losing all of your money and living in a van down by the river. So a little disclaimer there for you. So please be cautious. And again, do your own research. Know what you're getting into anytime you take trades or invest in any. If you hear me talk about a cryptocurrency I like, be sure you go read up on it yourself. Make sure you understand the investment behind it. That's important. So one of the elements here that I want to get into is I'm coming around. So I've always known the markets were somewhat manipulated, but this is almost an egregious, insane proximity. I cannot, if this ends up playing out, this is going to be in textbooks, trading textbooks for years if this copies and then goes off again. But I had a really nice comment from, I don't want to mispronounce your name, Rocky, but I think it's Rocky. And she says, and I would agree, in my humble opinion, the only reason, and I wouldn't know what the only reason, but a big reason why these patterns have a tendency to repeat themselves is because traders look to the past to direct their behavior in the present. History repeats itself. So that's a really good, that's a really good observation. I've contended in the past, I'm going to have to change my tune and I'll explain why. I've contended that these Wyckoff patterns are mostly play out because of human psychology. The human psychology is what drives a lot of this, greed and then fear and the greed cycle, and it repeats itself over and over and over again. The one thing I can't escape is how insanely similar, I got to turn up my audio because I have background noise I got to undistract myself from, how crazy similar this is. And it's not, human psychology would maybe make it look similar, but when you start just looking at, you look at this impulse here and then the sell-off, and just look at the size of this, and then look at this next measured move. I mean, human psychology doesn't cause a price appreciation to drive exactly like this at almost the exact same, a period. So, and size, relative size, right? So this is all smaller and compressed, but it's all, really, really close in a relative proximity here. And this is not the truth. This is just a primer for like the bigger red pills. By the way, they're coming later in the episode. The biggest red pill of all, I'll probably save toward the end. The biggest, and it's a doozy. Most people are going to reject it, and I might get a lot of people decide to not follow me after this, but that's okay. All right. Let's see here. Good morning, B-Rat. Thanks, and Anthony. You remember that from back in the day when I went over that. Do you think the obvious Wyckoff PA is confirmation that the institutions have more influence on price this cycle? Yeah. Somebody has control of this. Like that's my conclusion. I cannot escape the conclusion that a small, I don't know who they are. I don't care, frankly. I'm just going to play the game, right? This is the game that's presented to us. This is the game we have to play. And I'm going to play the game as presented to me. I don't care who it is. I don't care what their agenda is. All I know is that somebody or a small group of people have control of this market. You cannot make this exact, like this is, you go read any textbook Wyckoff. This is like perfect textbook Wyckoff distribution, perfect textbook Wyckoff accumulation, perfect textbook Wyckoff distribution, and I'm going to bet perfect Wyckoff accumulation. You do not get that insane, like these exact schematics playing out without somebody having complete control of this, and not just the complete control. You cannot do this without having more or less complete control. So I'm willing to play the game, right? You know, we got a good, the best trade in the past several months I've had was getting fully, like right here. There's a CTM entry on the breakout of this wedge right there. Was my best entry in months, and I've been riding that. I'm still in that entry. In hindsight, I obviously should have trimmed more than I did. I did close leverage, you know, over here when we came into this resistance. I did close a bunch of my leverage, but we were above one of my main moving averages at the time, the 50. So I didn't trim any spot. And then I'll just tell you guys, I'll be honest with you. I was gonna trim a little bit of spot when I started to see this. You see how this Wyckoff kind of, you know, obviously I saw this in action when this spike happened. I started getting real suspicious. This sell-off happened a little bit too fast for me to do much about it, but it bounced off the 50. So what I did in response was when we came back up into here, I think I posted on, yeah, we were on Spaces. We went live on Twitter Spaces on the 18th right here, right when it was spiking up into that, and it was a weekly resistance as well. And so I went ahead in response to that, coming into this trend line, into that weekly resistance, and closed on my leverage positions. And then the big sell-off happened. So that was nice that I got out of leverage ahead of that, but it sliced through the 50 faster than I thought it would. I thought I was going to have some time to trim some spot, and I never did. So I'm still 100% spot, and I'm not going to play these small bounces around over here. So far, they've been, you know, pretty insanely identical. I mean, just look at this. Like, this is I don't have this exact trend line on there, but you draw this trend line right here from the tops. That's what we're cutting across right there, right? And if I go back to my Wyckoff looking one, so that's kind of my first, you know, like I've just come to the realization somebody has complete control of this. So it's a little bit disconcerting, but it's what it is. We have to react to what is, not what we'd like to be. All right. So yeah, so see how these moves right here, this little trend line I have right here, are almost identical. And you see here there was a gap. Like if you would have drawn a perfect downtrend from this touch to this touch, these spiked above it. And if you draw a perfect from this touch to this touch, these spike above it. And it's spiking above it. So, you know, it's literally the exact same. You know, almost. But, you know, a bounce here, draw a trend line through it, and then a bounce that goes right above it and then tanks. A bounce that goes right above it, and we'll see what happens. You know, obviously it doesn't have to be exactly. So I'm not going to play these because I don't know if this plays out exactly like this. It's just a little bit scary that it's that close. Point is that we might get a trap and then a big sell-off back to a the secondary test in phase B, they call it in the Wyckoff people. Again, I don't trade this, and because I'm not a Wyckoff expert, I won't even attempt to. I just know, to me, in my trading methodology, this is chop sideways, right? I just call this sideways chop, right? So I'm just going to stay away from it. I guess if you're really astute on Wyckoff, you could probably try to take advantage of this. I can't. I'm not going to. That's just not my battle-tested, you know, system, so I'm not going to try it. All right, my computer is being crazy. All right, is this stream doing okay? I'm going to kill that. Anytime I play something else on YouTube, my thing starts going crazy. All right. Let me look at comments here. So, yeah, but so far it's pretty close. And look at comments. If you think somebody has that much control, will they let the projections play out and out? Has it charts to the end of the year? Blue Magic, this is where I don't know and I don't care. And you're going to hear me say that a lot. This is kind of another silly market truth. Red pill. I don't care. I don't care what happens, right? My job as a trader and as an investor is to Be invested in the long term in assets that have the highest potential for growth and for price appreciation. So as an investor, that's what I'm looking for. As a trader, I'm looking for good setups and I'm taking good trades. And I take those mechanically, and if I get stopped out, I get stopped out. I don't care. I just keep taking the trades as they're presented to me. And it's a pretty mechanical process, right? And I don't overthink it too much. If I've got a good trade set up, I take it, I put my risk on. The last few months, we've had a lot of stop losses. I've had more winning trades than I've had losing trades, but there's been a lot of stop losses in here. But that's part of the game, right? So back here, I didn't get a lot of stop losses. We were just blowing and going and killing it over here from, basically, I don't know, October all the way through April. So, and now it's a lot of sideways and a lot of stop losses keeping you safe, but that's just the game. So as an investor and as a trader, I don't care what price it gets to. I really don't. I'm just trying to maximize what is. Right? I'm trying to maximize the price action that actually plays out, regardless of any. Now, again, I consult the models and I consult Alan's work, because should we break out of here and start to really rise, make a new all-time high and re-enter price discovery, should that happen in the next few months, then guess what? I want a guide to help me try to dial in and be really closely looking for what could be the top of any individual move, right? So that's kind of how I play it. So that's how I play it. Is I'm looking for I'm looking at these macro charts for a potential guide to help me get more dialed in. All right. Thanks. The stream is good. That's good to hear. It's good to hear. Just throw this on here. See if my computer's gonna crap out again. Yeah, anytime I play, I don't know what it is about my streaming software, and if I have a YouTube music going on in the background, it just like craters. It's gotta be Chrome. Let's throw this on. So the other kind of truth, let's see here. While charting is all art, go back to this time last year and break out the start of the bull market and connect that line to the bottom of the last few days. Seems like it's holding. All right, let's do that real fast. And somebody asked me to put the ASCII Helsinki candles on here, maybe as well. Let's go do that. Yeah, I've got another prime trend line. So the start of the bull market through, this line, okay, let me just go back to my main chart here. This line right here, it's a giant wedge pattern we're in right now, right? So price, volatility in both directions is slowing down as we consolidate here. So should we get a breakout to the upside, it can move really big. Should we get a breakout to the downside, it can move really big, right? The fundamentals say that everything's still good. We're still in very solid fundamentals territory. So that's the other thing to keep in mind is, when it comes to fundamentals analysis, we're definitely in a good space. So I'm not too concerned about, I think the upside is definitely there. It's just a matter of when is it going to happen. And if somebody has this much control of the market and they're able to, here's the bigger thing. I know a lot of the projections that we've had, obviously this killed a lot of the models. All through here, this low price action through here really killed a lot of the price modeling. It had to be reconstituted on this low over here. All right. So the problem is if this pattern plays out like this, right? So we see here this price action above until you get this real big capitulation below that spikes down here. And then price really starts trading below here, then you have a final spike down there. If that spike happens when it seems like it might based on the length of this, you take the same length, that'd be mid-October, right? So I had it measured out here in that other chart. It'd be mid-October when that bottom actually happened. If that were to happen, that's going to put us behind schedule. So it's got a lot of price to get, a lot of resistance to work its way through here, just like this did, right? I said the same thing. When we lost all this, when this rolled over, and it's okay, rolling top, it's going to be a rolling bottom, basically. It's going to take time to reclaim momentum, and it might here, and then finally the momentum, has a chance to break out here. But you're going to have some resistance to work through as you get back through there. So that's going to slow down a little bit the breakout, and it's going to set the timing off. And I think I've seen lots of models. I know Michael's been working on the block-based timing, and he's got a peak out in in the spring. And if you look at my BLX chart here, I'm actually kind of more or less projecting the same thing. So the way I did it was I borrowed Ken Stanfield's kind of thought process here. I went, okay, psychologically, one second. Psychologically, what I saw clear as day was at the same time. What is going on? This is not moving. All right. Oh boy, this is like all messed up. All right. So in 2017, one of these big corrections was right at the same time frame when the 2013 from the time of the halving to the peak. We had a big correction right about the same time that this peak happened in 2013. I think it was this one right here. And then we resumed up. And so you see here the 2013 error peak, then we sold off again, the exact same time from halving, the number of days from the halving forward. That was roughly May 10th, and that's when we had a big sell-off. That was the same time as the 2013 era peaked. And you see here we have the 2017 era peak. As measured from halving to the peak, that date is October 19th. That could actually be our capitulation low, in my opinion, is October 19th. And then we resume up, and it just kind of blows everybody's models out. I don't know, because we're not in price discovery right now. So this is all going to be very different. But here's my main model. And should we break the downside of this trend line, then we'll have to kind of reconsider some things. But I could see us spiking down and then resuming up, right around that date potentially. So we'll see how that plays out. I don't know. But what I did is I measured the delta, the time difference between the 2013 and the 2017 peaks, measured from halving to peak, and I just pushed that out the same distance, and I got this date. I actually readjusted this the other day, March 29th. Now, this is not to say that I think the peak is coming on March 29th. I have no clue. I don't have a clue when the peak is. This is just a potential model. I'll be watching. If by some miracle we get, say, a touch of my top of this channel coming to that resistance at the same time we hit this date, you better believe I'm going to be looking at really closely what price action does there to start trimming. All right. Now, the reality is this channel that I have, this is a rolling top here, right? In theory, a parabolic top could take this out ahead of that, right? Break out to the upside of this channel. Like if you draw channels in the past, these parabolic tops, but nothing. I would contend that nothing says that we have to get a parabolic top either. All right. Yeah. So I'm gonna go ahead and say this, and then we'll move on. Afternoon, family. Ricardo. Hey, everybody. Here's the biggest red pill of them all. The biggest red pill of them all for you guys. All right. So you know how when we're all, you probably heard it when you were a kid growing up somewhere in church or something, that God, He's got the whole world in His hands. You get these pictures of God with the whole world. All right. I just, if you're religious, please don't get as unoffended by this as you can possibly. I'm just going to share with you some things that a lot of people have misconceptions about. The biggest misconception, the biggest red pill in the entire world is this. If you believe in the Bible, and you're either Christian or not, but if you're a study of religion, and you study closely, what the Bible actually says, the Bible doesn't say that God has the whole world in His hands at this time. What the Bible actually says is, in the book of John, I think it's 2nd or 3rd John, it says that the whole world is lying in the power of the wicked one. And if you go back and you look at when Jesus went on earth, think about this as history. I'm not trying to be religious or preach at anybody, but just think about this as history, okay? So according to the Bible's historical account of Jesus Christ, when He was on earth, He was tempted by the tempter, quote unquote. And the one thing that this tempter offered Jesus, the final test, the first test was, hey, because Jesus had been fasting for 40 days, turn these stones into loaves of bread. And it was a temptation, because he might have been physically hungry, right? And Jesus said, it is written, quoted from God's word, that you must live on not on bread alone, but on every utterance from God. Okay. And so He passed that test. The second test was the tempter, Satan, whoever you want to call him, took him up to the top of a high place and said, if you're a son of God, throw yourself down off of this because God says that He won't let your foot, your heel strike a stone, and He's going to have the angels catch you. Sounds like a weird temptation because, why would you just throw yourself off a building? That's just silly. But in the context of it, it was he was at the top of the battlement of the temple, and everybody would have seen him. And so it's a little bit of a temptation to show off that, hey, look, if I throw myself, I'm going to get caught by angels. But also, the Bible also reveals that Jesus lived before he came to earth. The historical account of Jesus indicated that he lived in heaven before he came to earth. And so he would have been, also these angels, he would have known them. Anyway, interesting. Nonetheless, it's kind of a weird temptation. Right? You're like, why would, but there's reasons for it. But the final temptation was the most interesting one. The final temptation is where the tempter says, okay, if you fall down and do an act of worship to me, and I will give you all the kingdoms of the world. And then in a vision, he showed him all the kingdoms of the world. He showed him all the government's kingdoms in the world at that time. Now, here's the biggest red pill. Stop and think. If this historical account is true, right? If this is true, you can make up your own mind whether it's true or not. If this is true, that means that that evil one, quote unquote, the tempter, had the ability to offer this. And if this is true, and Jesus is the Son of God and is pretty much all knowing, well, then he's going to know that this temptation's nonsense. He doesn't have control of the kingdoms of the world, but he apparently did. And the Bible makes it pretty clear he actually does. And so that's the biggest red pill. The biggest red pill is that a lot of people think that, God controls a lot, but the reality of the situation is in the current world that we live in, there is clearly a force behind the scenes. Now, I don't talk about this. This is the only time I'm ever going to bring this up in a live stream. But I wanted to bring it up because of the historical precedence of this. The bigger piece of this is a really distracting song. Why is my playlist putting "What's Love Got to Do with It" by Tina Turner in my playlist? What on earth was that? Probably a hint that I should quit talking about what I was talking about, right? So just take that for what it is. But that red pill is simply that most people think that God has everything in control and that he's controlling every little thing. And at this time, what people think, what the reality is, according to the scriptures, is that God has allowed the tempter to have control of the earth for a period of time. Now, it's a totally different topic, what the plan is to correct that situation, but nonetheless. The bigger point is that if most people, a lot of people, I would say, think that, they don't really understand that the Bible explains, according to the Bible anyway, whether you believe it or not, it's up to you, explains that there is an evil force that controls the world. Now, I'm not a big conspiracy theorist, and I actually was not very big on a lot of this market manipulation stuff. But again, going back to this, I think I always thought that this type of stuff happened because of, again, human psychology. But I can't look at this. I can't look at this and this. See the perfect symmetry of the third drive up here above this trend line. 1, 2, 3, third drive, a big drive up and a big correction down. This correction happens so fast you can't do a lot about it. It just liquidates a lot of people. Up into this resistance, this trend line, and then just a big correction down. All this symmetry, I can't look at this and go, okay, there's not, and I'm not saying it's like the devil, and that's not what I'm saying. But there's obviously people in the market that have control of this. Same thing, I have to open my eyes and go, okay, what have I been told and what's the truth, right? And there's a difference between what we've been told and what the truth is often. As you guys are, I'm sure, are aware, we're raised. Back to the red pill, let's get out of the religious part of it. Back to the red pill and how the markets work. I've heard a lot of people argue about proof of work versus proof of stake, right? So Bitcoin's proof of work versus what Cardano does with proof of stake. And the whole proof of work versus proof of stake, a lot of people say, well, the proof of stake system is basically just the same thing we have now. The more money you have, the more control you have, and it's going to turn into the current, centrally controlled fiat system. And I can understand how people are concerned about it becoming centralized, and what are the ramifications of having a security model based on and rewards based on how much ownership of a particular asset you have. I get that. But the reality is, the truth of it is, the other red pill is how the system actually works. And how the system actually works is those who have control of the monetary system, those who have control of the banking, they have orchestrated systems over time. It's taken them, a few generations and several decades or to get this kind of dialed in. But they can create money out of nothing to lend it. Right, so this is fractional reserve banking, right? So fractional reserve banking is I only have to have a fraction of the reserves and I lend it out multiple times. And now we've gotten to a point that I don't even have to have any reserves. I just lend it out. And so what the name of the game is getting as many people addicted to those loans and paying interest as possible. So if you think about it, if you hear the interest rates like 1% or 2%, whatever the Fed interest rate, the actual interest rate, the real interest rate that the Fed lends to banks. If you create money out of nothing and lend it at 1%, the interest rate is effectively infinity because you create that money out of nothing. So it's like if everybody on this live stream here today, if I just gave you all $1 million and you started paying me 1% interest on that, but I generate that $1 million out of nothing. So I've got $92 million. I just give you all $1 million and you start paying me 1% interest. I didn't do anything other than set up this cabal, this system to generate that. To lend to you. And so the same thing happens in banks, right? They get a small deposit, or they get a deposit or a loan that they can lend out, and they're able to lend that out multiple times as they reorchestrate things on their balance sheet. They lend it out up to 9 times, right? So this fractional reserve banking, that's where the power lies in the current monetary system. And that's what Bitcoin and Satoshi was trying to topple, was the central control, the ability to arbitrarily, out of nothing, create new money to lend out and then collect interest on that. Now, I think the populace would obviously rally against, like if they knew that they were just literally printing money and then putting it in people's pockets and people were just spending that money directly, people would lose it. But they can obfuscate, they can hide it as we lend out this money and then collect interest. Well, they're collecting interest on nothing. It's coming into them. They didn't do anything to create the money, and now they're getting interest on it, right? And those interest payments, obviously, the other part of it is they want the whole world in debt. And so you look at the whole debt situation. You look at you and I, everybody, we've been trained our whole lives to, be a good student at school, then get student loans and live on debt and go to college. Here's the other red pill. I'm just going to go off kind of, I guess, this episode. So ignore me, quit following me if you don't like any of this stuff, whatever. But the college system is a problem. It teaches people to live on debt. So it teaches you, what you learn to do is you learn to go get an education first and live on debt for years and live indebted to somebody else. There's another, biblical, but there's a book of wisdom, we'll call it, that says that, the borrower is a slave to the lender. Okay? So, and that's obviously true, right? It's a proverb. The borrower is a slave to the lender. Okay, so obviously, if I can create money out of thin air and lend it to people, then everybody's my slave, basically, right? So that's kind of like, okay, that's a red pill. You're turning everybody into your slave if you can lend to everybody and not have anything backing that. But what the college system teaches kids to do is they live on debt, and so they live their whole lives in this bubble of they just borrow money, buy things, and then they have this perpetual debt. Now that's a small piece of it. The bigger, more insidious part is how governments are subject to this debt. And so it's been clear over time that the powers that be that control these monetary levers, they keep the governments in debt. And so the reality is, you look around and people will say, like in the proof of stake system, well, it's just like the fiat system today. The more you control, the more money you control, the more money, more power you have. And that's true for a very small select few people, but they don't actually control them. They create money out of nothing. In a proof of stake system, if you had a protocol that was able to be arbitrarily inflated by a handful of people, that would be an even bigger issue. So if we can avoid that trap to begin with, that's a step forward. That's kind of my main point on that. But going back to this system of debt and what we're trying to get away from is, debt's okay. Debt's useful for certain things, right? Taking on a loan to be able to advance if you have a really good business and you need, to buy inventory or something like that. Taking on some debt to fund those activities. there's reasons to take on debt, but it's become clear that the world is addicted to debt, including, like, look at this whole debate going on right now in the United States, right? Again, I'm not going to be political. I happen to live in the States, but we'll just call it for what it is. They're all debating about raising the debt ceiling again for like the millionth time, and the nation's addicted to debt. So, there's only a few people. There's very few people that actually have a lot of like money as far as cash. And they're probably not very intelligent. Most people who have a lot of money are asset wealthy. So they have a lot of assets that, their value is pretty static. They got a lot of land, real estate, gold, whatever. And as the money inflation problem happens, they just, their assets stay the same value. So they're asset wealthy. And so so that's the other kind of like part of it is that's the way the system today works. Okay. The point is fractional reserve banking is a debt-based system, and they want everybody from nations themselves to the individual to businesses. They want everybody in debt because, as that proverb says, the borrower is a slave to the lender, and that's really what's going on here. Now, as far as all the FUD and stuff around Bitcoin, this is what Bitcoin tried to solve: was, hey, if we have a fair monetary system with a very fair, inflation system, and the rewards are given to people based on their contribution to securing the network and not based on, just the bill control, right? That's a much more fair system. And so any arguments that you hear about, the centralization of the mining or whatever else, at the end of the day, no one person has the ability to arbitrarily inflate the supply and lend it out. And that's true of Bitcoin, Ethereum, Cardano, pick your favorite. And as long as that piece is true, that's a huge step forward. So, maybe we can stop debating like how, Bitcoin versus Ethereum versus Cardano, because all of them are a vast leap forward over this debt-based system, right? So that's another small like truth thing. But as we watch this chart, I'm really talking and watching this going, this is just consolidating. You see, again, what I did earlier, if you draw this perfectly on these two touches, it goes right above it. Draw it perfectly on these two touches, it goes right above it. That's insane. So the third touch, this is a series of getting people. This is actually a potential entry, right? You look at that from a CTM perspective. This is playing like this is a breakout, retest, resumption, and then immediately turn around in your face, and it's going to do it again over here. So this is where not being astute to this can get you just getting chopped around in the market. And so again, obviously the big trap up here too is a big one. Now I avoided. I'm going to share this with you. I avoided this trap last time because I had this on. I was waiting for a 12-hour signal, and when I don't remember exactly what trend line I was watching, breakout, but we never had a proper retest. Like I was looking for a proper retest of actually this level right here, I believe. And it never retested and resumed off of that level. It just broke out, hit resistance, and came back down. So a possible way to help you avoid the trap is, if it hits resistance and turns around, what you're looking for is it to come back to retest the support level and then resume off of that support level. It never actually did that. It came pretty close right here. You see this maybe test candle here, but it didn't quite fully resume on any of these. So this was a that helped me. I didn't get hit by this trap. I didn't take a trade on this trap last time. So hopefully we can avoid that again. All right, I'm gonna look at comments now. I went off kind of on some stuff. Now let's see what people have to say about that. I was purposefully not looking at the comments while I went through that because I was like, people are gonna be angry. All right, fire. Okay, Bitcoiners seek truth and a just world. No other country is free education. That's a different culture. All right, let's go back up to the top here. Great morning. Thanks, Joseph. He says he loves the TA. Crazy good music. Oh, the opening music, maybe, hopefully. I drew mine up higher. Afternoon, family. I don't believe that interpretation of the gospel, though. The Jesus test was more of a metaphor for people rather than a physical insight into Jesus. 2 cents. We can... Run DMC, hit me up on Twitter. DM me on Twitter, we'll discuss. It's good for you to explore your thoughts like this. We value the process. Lobbyists trying to make a move, maybe. I read somewhere that institutions account for more than 60% of all Bitcoin trading anyway. Yeah, that would make sense. This is obvious. The institutions obviously have control of this thing. Somebody does anyway. Then was 2,000 years ago. Now things have changed. Well, Run DMC, I'm gonna throw this one at you. All right, 2,000 years ago. Okay, there's an old book, really old book, longer than 2,000 years ago, 2,700 years ago now. There was a man named Daniel that was a Hebrew that was taken captive by the Babylonians when they conquered Jerusalem. And he was brought to the city, lived there for many, many years. And one night, the king had a very disturbing dream. Now, the dream was an immense statue. Now, this is, if you don't like this, guys, unfollow me, whatever. I'm just telling you, this is how the story relates in history, right? So think of this as a historical account. And you don't think of it anything more. All right, so as the historical account goes, the king has this dream, a very disturbing dream, and he can't. He wakes up very disturbed, calls all of his magic practicing, all of his astrologers and stuff, and says, "Okay, look, I need to know what this dream meant, but for me to be certain that I know that you can tell me what the dream means, I need you to actually tell me what the dream was without me telling you first what it was, right?" And they're all looking around at each other, the astrologers going, "Nobody can do that. Nobody can tell you what your dream was and then interpret it for you. You have to tell us what it was first, and then we can interpret it." Yeah, okay. So he's like, "Nope." And he threatens to have them all killed because of it. And so somebody pops up and says, "There's a man that we brought from the Hebrews that can interpret this dream for you. And not only interpret it, he can tell you the dream. His name is Daniel." So they want to go get Daniel. And Daniel comes before the king and says, "Yes, king, my God has revealed your dream to me. And your dream is this. You saw an immense statue. And the statue is a head of gold, a chest of silver, thighs of copper, the midsection of copper, legs and thighs of iron, and then feet of iron and molded clay. And after you, O king, will come a kingdom inferior to you. And then after that will come a kingdom that will very quickly sweep and conquer the whole world. And then after that will come a very iron-like kingdom. And then after that will come a divided kingdom. And that divided kingdom, the foot of clay and iron, is what..." Sorry. That feet of clay and iron is what... so then what else you saw in the dream was that there was a big rock that was cut out of a mountain, and it smashed the feet of clay and iron. Okay, and it destroyed this whole statue. That was the dream you saw, and he went on to explain his interpretation. Basically, that the nations had been judged and weighed deficient. Blah 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 blah. Okay, that was a different. That was writing on the wall, but nonetheless. What's interesting about that? This is 2,700 years ago, and it's really historically, it's not really debatable that this book was written about 2,700 years ago. So let's just start with that. All right, so 700, 600 something BC. Daniel writes this, right? Okay, so was it 2,600 years ago now? All right, so after Babylon fell, now the biblical account and history kind of has a similar take on it. Basically, the Persian Empire rose after the Babylons, and there's a lot of evidence to suggest that the city was taken. Is the stream still live? It's like I'm getting like an. All right, let's see here. I'm getting like crazy. All right. So the point is the head of gold was a superior metal, and then the Persians, who were at the time a kind of a smaller nation that would have never been considered in contention. It's kind of like it's like saying that Mexico is going to rise up and overtake the United States. I mean, not to put any shade on Mexico, I love it; it's a beautiful country. But from a military might, it doesn't make any sense how that might happen. But the Persians were able to gain control of Babylon. In a very short time, they were able to conquer the city with very little effort, and that was the silver, right? And then after them came the Grecian Empire, which spread very fast. Alexander the Great spread very fast, and then after them came the Roman Empire, and they ruled with an iron-like disposition. So they had both. What the iron-like part was is they had both control. They figured out that if they had control over kind of the religious part of things, right? So the Roman Catholic Church, if and obviously, you know, Catholics today, I know I was born and raised Catholic, I'll just share that, but I'm not going to say anything else. But the Catholics today acknowledge the reality that in the Dark Ages, you know, the Catholic Church did some pretty terrible things, and you know, but they had control of the people. And so one of the big things that they did is they didn't want people to be literate. They didn't want them, and especially the Bible. So there were very few, basically no access to the Bible. It was all translated to Latin, which is a language that people didn't commonly speak. It was chained to the pulpit at the church, and you couldn't actually get access to it. Stuff like that, right? And there's many other things that happened, but that's one of them. All right. But that iron-like, it's interesting that Daniel describes that as being iron-like in their control. And they were iron-like in a lot of ways in that they had full control. Whereas, like, if you go back, the way the Babylonians ruled and the Persians that came after them especially was really interesting. Instead of trying to force people into their ways, into their thinking, what they did was they allowed them to continue on with their own customs. And then they kind of started this thing of, okay, tell you what, instead of us completely dominate and you having to think our way and do things our way, you can continue to have your own customs, your own religion, whatever. Just, you know, pay us your tax and be obedient to the kingdom, show up for war when we tell you to, that type of thing, right? And otherwise, we'll leave you alone. And so that was kind of a novel idea. But then later on, and then, you know, the Grecian Empire was more high thinking. You know, they you know, were very thoughtful about a lot of things and all the philosophers and so forth and so on. But then the Romans that came after them, they emulated Greek and they admired Greek to a large degree. But then they started getting this more iron-like disposition around the control of things, and that's what led to the Dark Ages. So the iron legs in the Dark Ages go hand in hand, and that was the point of the illustration. And that was written, I mean, you can't debate that was written long before the Roman Empire ever came into existence, right? So, but then, interestingly enough, he said that the final kingdom would be divided. It'd be mixed clay and iron, and you know, clay and iron don't mix together. So it's partly of clay, partly of iron, and the kingdom was to be divided, and that meant both the actual kingdom and the people in it. And so, tell me, you know, that was written 2,700 years ago, and tell me now, under the current, you know, world powers that we have today, has there ever been a more divided world? I mean, I'll just, you know, if I say that I think this is Wyckoff, somebody's going to argue with me that it's not. If I say that I think Bitcoin is a store of value, somebody's going to argue with me that it's not. If I say that, you know, gold is a precious metal, somebody's going to somehow argue with me that it's not. Like, I don't know, nothing you can't put anything anywhere and not have somebody argue with you. So I got this. I'm going to have to shut this down after today, but just. Like, so it's super interesting. That book, yeah, it's 2,000 years old, but that was written 2,700 years ago, and it pretty accurately described the condition of the kingdom that came after Babylon. It pretty accurately described the condition of the kingdom that came after Greece, and it pretty accurately described the kingdoms that have come after the Roman Empire, and the time that we live now with such divisiveness. And so I find that highly interesting. Now, I think you can take it as a historical account, and you can take it for what it is. But that's the way it was recorded. Again, make up your own mind if you believe, to what extent you believe it or not. But the fact remains that it was written 2,700 years ago, and it described a succession of kingdoms, and it has successfully done so. So, interesting. Food for thought. All right. So, yeah, divide and conquer. Division of power and control. All right. Not enough Christians talk about the fact that the Bible says that Satan is in control of the world. Thank you for talking about this. We are called to be vigilant and pray without ceasing. Yeah, so, and I just, it's not like the Bible says it'll always be that way. And it's not like the Bible said that God gave up ultimate control. He ultimately has control. So people that say that he's got the whole world in his hand, they're right. I mean, it's not like God, as according to the Bible, has abandoned the world and all of us entirely. It's the point is that there is somebody that has an influence for a reason, for a period of time. We won't get into that, but it's more. There's a big debate. It's a big courtroom scene going on right now in theory, right? So the way the Bible describes it would be basically a giant. This is all a giant courtroom battle right now. Where'd my music go? All right. Satoshi Clan fire. BTC created by intellectual arm of the USA as a liquidity soak versus gold. Could be. I must have already taken these red pills. So do you think that the bankers are manipulating Bitcoin to crash it and take control of it? Shane, I don't know. It's a great question. The money masters are going to come after this thing at some point. Here's the biggest risk to Bitcoin. Now, if you've ever watched, I got red pilled pretty hard last summer about money and finance by Jordan Conquer Trading. He said, go watch this video called The Money Masters. And I went and watched it and went, oh my goodness, this is crazy. Talks about the history of money. And history is fascinating, right? So, and that talks about kind of the history of money. And there's some things I knew, but there's a lot of things I didn't know that happened throughout history, and how the gold system came into play, and then how these notes IOUs started circulating, and then how basically as soon as you had a paper, well, even with gold and silver, obviously back then, talking about the Greeks and the Romans, they did money clipping, right? So they would take a part of the coin, they'd clip it off, and keep that for the treasury. So there was a form of inflation back then where you might have had 1 ounce of gold, and then after they clipped it, you might have had 0.99 ounces of gold or whatever, right? So they were doing that money clipping and taking a small amount of the metal, shaving the metal from the coins. But then when they had these IOUs, these paper derivatives of the asset, whatever it is, gold, silver, when you had these paper derivatives of this, then they could really start to have fun with with things, right? When there was just a piece of paper that supposedly was backed by something, then they could gain a lot more control of things. And so that's when really the money masters kind of rose, is when they could get control of money via these paper derivatives of some type of asset. And then the fractional banking system came along as an even greater form of control of the monetary system. And now they fine-tune it all the way down to what we know today as the Federal Reserve, central banking system, really. So, fascinating story. But as far as your question about do I think bankers are manipulating it, all I know is the biggest threat to Bitcoin is those money masters. They're not going to let this go without a fight. And so it's going to cause volatility. The problem with that is the Bitcoin is in the wild now. It's like, I don't know how they can get control of it other than printing a lot of fiat and buying it all up and inflating the price and giving us all a chance to get out at a much higher price before they do try to kill it. But I honestly don't. I don't know. I've heard theories that this Wyckoff is being actually controlled by Grayscale. Holders, which they're the largest holder of Bitcoin. I've heard all kinds of theories. I don't know. And the other thing is, I don't know, and I don't care, really, honestly. I'm just a student of the market. I'm seeing this pattern, and I can't unsee it. So now I'm just going to play the game, right? At this point, I'm just going to play the game best I can. For example, I'm going to try to avoid buying this trap if I can, figure out that it is a trap. Now the problem is I don't want to miss an entry. So if we get it back above this creek here, and we get a CTM entry. Again, part of the games could be they made it look exactly the same 90% of the way, and the last 10% is going to be totally different just to throw us off. Okay, I'm going to play. I'm going to play the game, whatever it is. Again, back to CTM principles. This is going to consolidate, right? We're going to have some sort of consolidation pattern, and you're eventually going to get yourself a nice entry. So if you draw this to there, right there, you see I've got a 12-hour. That was the last entry I had. It was perfect. The whoever was controlling this gave us a perfect. This consolidation, breakout of consolidation, breakout, retest, resumption, and then boom, there's your entry. Now, it took a couple of entries of stop loss somewhere over here, I'm sure, to get to that entry and that I've been able to ride. Oh, but that's part of the game, right? So, sure. But you have to, this is where I'm going to dial in my risk management. If I think I might be, if this trap comes in higher, I'm like, well, it looks like we're above the creek. We got a CTM signal above the creek. I'm going to take this entry. Guess what I'm going to do on the other side? Is it had better take off like this and never come back, because I'm going to put a tight stop under that thing, right? This might be a trap, so I'm going to be careful. I'm going to play it. But I'm going to play the game. That's what I'm saying. I'm not, I don't know who has control of it, and I don't care. I'm just going to play the game. If I think it's a trap, basically it's going to cause me to put a tighter stop under it. If I get a full entry, 12-hour CTM entry, I'm going to take it. It's mechanical. It's just what I do. I'm going to mechanically take it like I would any other trade, but I'm going to keep a tight stop under that. Very interesting, Brandon. Are you familiar with the modern book called The Better Angles of Our Nature? I am not. It's funny how people my age cannot afford the housing my parents could without taking massive loans, at least where I'm at. all this our parents could. Yeah, so obviously it was a lot more free. People had a lot more disposable income in the, through the mid part of the 1900s, right? That was kind of the golden era. So my father-in-law was born in the 40s. And so, you look back at his life. They lived in California in a house overlooking the bay that would cost $1.5 million now. And to them, that was just an average house. That wasn't any big deal, right? It probably cost $2 million now at least. And it was, not probably a 1,500 square foot, 2,000 square foot house or something. But, people had a lot more disposable income for sure, especially in the 70s. You see, there's all those charts, what the heck happened in the 70s when we got off the gold standard and things really started getting off the rails. Because it was totally, fractional reserve banking is bad enough, but when you get off the reserve part of it and you just have fractional banking, it's like things can really go off the rails fast. Anyone curious where he has going with the story? Has me hooked. Oh, hi Rocky. Yeah, you're the one that posted this on Twitter. Thanks for being here. Which story were you talking about? The Daniel book story? I was just talking about it's interesting that people say the point of that story it's one of many examples. But people say, something written thousands of years ago is out of date and can't be valid today. Well, I don't know about you, but there's a lot of proverbs that were written thousands of years ago, and there were a lot of just the historical figure Jesus Christ. If you take and listen, some of the things that he said in his saying, it's beneficial. I mean, he told us to love our neighbors and things like that. And nobody's going to argue that that's not beneficial. So, but the bigger point was, just because something's old doesn't mean it's not valuable, or that it's out of date. It may be out of date in some respects, as far as it's really not. Let's just put it that way. It's remarkably not out of date. Let's just put it that way. In my opinion, this is my opinion. Take it for what you want. All right. Looks like found another red pill, brother. Hope the bear market is over. I really want to pump. Yeah, I mean, based on the fundamentals, my impression of this is that we'll get this spring and then a nice pop. I don't know where it takes us. Oh, we need to look at Alan's thread, then I'm going to wrap up. Enough of this. All right. Here's his current projection. I didn't see it on-chain one for this week so much, but here's his model that he's developed, right? In theory, a blow-off top would take us to a touch of this market top indicator that he's got. And so what he's done is the prices that he's putting out here are basically, it's saying that if price were to start appreciating exactly as it did in 2013, it should hit $266,000. If it follows the 2013, $279,000. If it follows the 2017 trajectory, it's going to be $250,000. If it follows the early 2021 trajectory, it's going to be $250,000. And based on the ongoing, I forget, Alan described it. So go back to the video that Alan did with me. He described how he came up with this exactly in our video. I can't remember off the top of my head. As far as on-chain goes, I did share it. Let me find this tweet. This is actually really important, actually. Willy Woo put out something yesterday, and I've been talking about the illiquid supply ratio on Bitcoin, and I've been trying to track it, but Willy put out some updated research that, it's not... Is that going to be a retweet? Is my retweet going to show up? Yeah, here we go. Willy Woo put this out there. Okay, perfect. This is really important. All right. So you see the illiquid supply ratio. So somebody posted this. This is the standard illiquid supply ratio chart that you'll get if you go to Glassnode, right? And you just punch. You go to the illiquid supply, and you get this. It looks like there's a huge spike in illiquid supply, which normally when that spikes, price follows shortly thereafter, right? So Willie put this out saying, okay, it's going up. Our liquid supply is going up, but let's see here. Yeah, supply adjusted for drift. And so you have to read through this thread. I retweeted it about Willy Woo. Look him up. He's like the OG of on-chain analytics. Basically he adjusted this model and said, okay, the liquid supply is not actually spiking and it's not an all-time high like we thought because there's some drift here. Now, I don't remember exactly. Primer, 3 classifications: illiquid, liquid, highly liquid. I'm going to get into the tweet where he explains what the drift is. It takes 4 years to complete stabilization, though most of the stabilization happens in the first 3 months. Yeah, so I think it's basically all the price action from this year has created this drift, basically. And so the liquid supply ratio isn't as high. This is the top one, the dark green, is the Glassnode's version of it. And then the bottom dotted line is Willy Woo's illiquid supply ratio adjusted for drift. And you can see that we are trending upward, which is a good thing. But again, it's been trending upward this whole time. But it's not as high as we had thought. It's not making all-time highs. So what this means to me is that a big price increase is not as imminent as I once thought it was. Okay, let's we'll break it all the way down. When I look at this, when we see this spike over here, it reminded me of this move all through here, and a big move in price. You see this kind of this. I don't know if you can see my mouse or not, but right between July 2020 and January 2020, this little spike here where we had this pop up, come back down, and then the huge meteoric rise in price. We had a very similar looking pattern to the illiquid supply ratio here. But when adjusted for drift, we're not, so that kind of tells me that we're looking at the dark green line, I think we're pretty imminently close to liftoff. But looking at it adjusted for drift, we may be further out than we think. It may be a matter of weeks, but this illiquid supply ratio has drifted further to the right and not as much up as we once had thought potentially. So I need to dive into this, but that simply led credence to what I'm seeing on this chart is that the liftoff might be a little bit later. Like if you measure this, one more thing to measure here, I'm just going to show you all this. Just do this live. So from this peak to that peak is 96 days, 54% up roughly, right? And from that peak to down here is I've got 97 days. So basically, roughly, let's call it the same length, right? We can forgive what's a day of difference, no big deal. All right, so 96 days, 97 days, 55% increase, 55% drawdown. Roughly. Now, obviously, drawdowns, a 55% drawdown is twice, 55% gain, right? So it takes 100% gain to gain back a 50% loss, right? So let's keep that in mind. But what's interesting is that from this peak to that peak, 97 days, 54% up. From that peak to that peak, almost the same number of days, almost the same number of percent down. Okay? So from this peak, depends on which peak you pick. I'm going to pick the closer one just to give us a closer date. Actually, let's do the pessimistic one. Let's do the pessimistic date in case this little liquid. Okay. So we're going to say it's 38 days. So you can go anywhere from 37. So you see I've got it here. Let's leave it right there. 38 days, right? So 38 days up and 25% up. So if I take the same number of days down, so from this peak, 36 days in this case, right? So this case it was a day longer. So let's just bring this out one day. 37 days here, just get it a little bit more equal. 38 days, make it equal. All right, 38 days. 38 days from the peak that we put in on September 7th, that takes us to October 15th, mid-October. And 25% down takes us to 39,000 or so. Right under this green support line, right? Right around the SC level, the selling climax level. So, when I saw that from Willie, I went, oh my goodness. I was thinking that a big price rise was a little more imminent because of the illiquid supply shock. But when you adjust it for drift, it kind of lines up. All this stuff being pushed out a little bit further kind of makes more sense now. So this is why I'm staying dialed into a mid-October bottom and a spring level, and then we'll see what price does after that. But if I can patiently wait for, as long as we don't get above this trap level, if we get above this trap level, retest, resume, and get out of here, then this is all invalid. And if somebody does have control of this market, they purposefully might have made it break out early just to throw people off. I don't know. But traditional Wyckoff would say that we've had our selling climax, we've had a secondary test. We haven't had our secondary test phase B yet, because the secondary test phase B is really, if you remember back on June 22nd, I was closely watching everything. It was just broad capitulation. This was just people like, what is going on? This was a huge liquidity purge spike down. This wasn't active selling. This was more people getting liquidated and stop losses getting hit. Was this spike down right here? This spike down was broad retail capitulation. It was while they looked similar on the chart, it was a very different set of behavior. This was not so much liquidations as it was. There was some liquidations. This was just broad retail capitulation. You can see it lower. This was kind of a disbelief, sell-off. Like this happened so fast, and it was liquidations all over the place and bounced back fast. This was capitulation. I don't think the other piece of this, I know people may disagree with me, I don't think we've had the retail capitulation for this move yet either, right? And so that will happen if we get a trap move. It's going to cause people to buy in, and then it's going to tank on them potentially, right? And that's going to cause the broad capitulation. People are just going to give up in masses, right? Anybody who bought over here is finally going to give up. People who've been holding, who bought the bounce, bought 48 to 50,000, started getting excited again. When this bounces and like, all right, I'm almost back to my and then it just turns around on them, this is going to cause that capitulation spike down, right? That same thing that happened right here. And then price can ping pong around, hit the spring level, and out. So I do think we have, like, the reality is just the way markets work, we have a capitulation ahead of us that hasn't happened yet. This was liquidation. This was just a big sell-off, right? Kind of disbelief into the selling climax. This is just going to cause the actual capitulation of retail. This is where most people are going to give up right here. That hasn't happened yet, so I'm still waiting for that to happen. So my point is if I can avoid the trap, right? Now again, if we get above the trap, get a breakout, retest, resumption, then I'll take a trade on it. I'll just put a tight stop loss on it, and then I might have to eat a stop loss, right? Maybe they'll get me. Okay, whatever. I'll play the game. And then the big capitulation happens. I'm not going to sell on capitulation. I'm going to patiently wait and see what happens, right? And then if we were to sputter down here, hit a spring level and break out, well, then that's going to give me my perfect entry. And then I'll try again right down here. And if I get a good entry, then hopefully we can ride that just like we did this one here. So that's my game plan. I don't know. Again, I don't know who's controlling this. I don't really care. I'm going to play the game. I'm just watching, observing. All right, everybody. I hope this was a useful session. I saw this on a video yesterday. The signals of RRR came out from 12. The signals of RRR came out from 12-hour time frame. All right. So Gene says something about angels. I don't know. It's funny how people my age can afford. Okay. Thanks for your answers. I understand what you're saying about not caring if it's something. I like speculate though. Very interesting. Ancients had much more wisdom than we modern enlightened thinkers often admit. Yeah, for sure. For sure on that. The signals of RR. Satoshi here from CTM. Appreciate your perspective, and I agree. There's a clear market maker manipulation at hand, and also massive use of HFT bots. Yeah, bots too are a big part of this, and algos that are driving the PA pattern. Yeah, exactly. So a good point is that what maybe allows them to make this look so incredibly similar is as algos, and frankly, maybe this is just AI taking over. I don't know. Maybe the person in control is not actually a person. Maybe it's just a bunch of robots that are they just have dialed in and figured out exactly how to manipulate human psychology and steal everybody's money. So that might actually be the most feasible answer. Is it's simply just algos just doing their job. All right. My birthday is late October, so I'd welcome a nice spring as a gift. Thanks, Joel. Would be interesting to try and predict the strength out of the spring. Yeah, that's going to be interesting to watch, isn't it? To see how strong this bounces out of the spring. The key question is the spring going to be able to take us past all-time high and back in a price discovery? I would imagine, based on this measured move here, let's just measure that real fast. This is a super interesting session. 81%. We got a move out of the spring of an 81% price increase after a 50-something percent drawdown. So not quite taking back the measured move down, right? But let's see here. Yeah, so that really wouldn't give us much of a bounce if we did the same calculation there as how it would take us back to 49, 50,000 would be the spring. Because obviously here we didn't get back on this spring. Just keep this in mind too, right? So on this spring, it got us back to a certain percentage of what we had lost, but not all of it, right? We recaptured, let's just say 75% of the price. I don't remember how to measure it. But we captured a good chunk of the price that we had lost, right? Like I said, maybe 75%. So this, in theory, You look at this price action. Where does that put us? Yep, the spring will bounce us at least back to say 46, 47,000, and then you'll have that whatever the Wyckoff people call this above the creek, the LPS, whatever that thing is, and it should in theory resume out of there. So if it does resume out of there, let's see where that price then would take us. What's interesting is that you had that LPS whatever over here. This was it, like almost certainly. Well, that was it right there, and then it shot us out. And that the spring plus the LPS bounce got us to 53,000 roughly, right? So we'll see how strong price action is coming out of this. Again, given fundamentals, given a lot of the cycle, the 4-year cycle modeling and everything else, it could, in theory, blast us to prior all-time highs. And then once we enter price discovery, then all bets are off. Anything can happen. You've heard. I know a lot of people everybody's been pinging me. Oh, Heath said that 200,000 isn't happening this year. What do you think? Well, Heath's a price action trader, and he's probably right to think that and be cautious and not plan on that. I would agree with him, but I agree with him because I think that the peak is going to be pushed out to spring. So I do think there's a good chance either we get another rolling top because if the market's manipulated like it is, maybe they'll let this happen again, right? This part of it happen, a huge run, and then maybe we just get a whole another Wyckoff rolling top, and then we'll know what to do, right? Because we've seen this movie before. But if we get a third, I think this will happen in the springtime. Is kind of my point. My point is Ben Cohen. I have to give him props. He's more accurate than not if this ends up playing out and goes to the spring. I still contend his early. When I first started debating with Ben about the whole lengthening cycle thing, I don't know if it was much of a debate. He probably mostly ignored me. I was attempting to engage him in a debate and did for a little bit. He was saying like the end of 2023 would be like the peak or something, right? I think that's way too far. I think that's like 200 or 300% lengthening of cycles doesn't make sense to me. I think like a 20%, 30% lengthening makes the most sense to me. So again, you go back to my chart here. I've been kind of eyeing that. Ever since I heard Ken's kind of thing and this whole summer price action kind of got me really looking around, and I've been eyeing a springtime potential peak, which again, it might just be a rolling top. It might not be a blow-off top. But that's why I think Heath is probably right about the not 200,000 by the end of the year, in my opinion, because I think that price action gets pushed out. Now, again, I can see it's Bitcoin, and when it enters price discovery, it can move big. So I'm not gonna be, again, I don't know and I don't care. I'm not going to be beholden to any price target, right? If it hits 500,000 by December, late December, then guess what? I'll have to hedge because I don't want to take profit in 2021, but I will be buying, hedge protection via futures to sell in January. I also have a bet. I want it to be pushed out to early next year so that I can have all year to plan around my taxes and not have to pay taxes right away. So that's my other big piece. All right. Thanks, everybody. Michael, what's going on? We got to get together about that session. All right. I'm going to wrap up. Yeah, I've been going. This is way too long today, but I hope this was a good session. I'm starting to wear out, though. Hey, look, I'm live now. Look at that. Where is my Doge-wave? All right, guys. Thank you all for your time. I hope this was an insightful session. Take care.